guys, what's up? Welcome to this channel. It's your boy Sammy. In today's video, I'm going to be showing you when to know when the market wants to reverse in an opposite direction. Now let's take for an example. This market is actually in a bullish move. How do we know? The market was giving us a lower high and higher low and higher highs. Higher lows and higher highs were being printed in this market. This was the height of it. Now take note of this. Whenever the market moves in this direction, it gives us two things. Now I like to use two trend lines to predict what market is actually doing. One of the trend lines that I use is in the lower time frame. If you go down to the lower time frame, you'll notice that there will be a break in this trend line. This is it. Now whenever this market breaks above this trend line here, it means the market wants to reverse back to the downside, and it will definitely respect it. One of the ways you will know that doesn't mean that this market is actually turning bearish. It means the market has broken from the upper trend line. It's actually coming to the main trend line, which is in the 4 hours. This will happen in the 30 minutes, and it will be several higher highs and higher lows, telling us that we are bullish. But all of a sudden, you will see lower high and lower lows in this section coming down. But that doesn't mean the market is reversing. It means you have to draw your higher time frame line to be able to know what the market is doing and what price is doing in the higher time frame. That way you have your higher chances of winning in the market. Okay, I'm going to be moving you down to a serious issue that folks find very difficult to understand in the market. And one of the issue is we actually think that when the market moves up in the bullish scenario, after all, it's going to be turned into bullish. No, it actually continues in the bullish move. Mostly if it is in a higher time frame, like what you can see here. Some persons here will be selling here. Will be selling from here. Let me just take this out. Okay. Some persons will be selling here, thinking this market is actually turned into bearish. Now, I want you to take note of some things. Why didn't I draw this trend line from here? It's because it actually has a different move that I'm not sure of. This looks like a triple top, but it's actually a trick that traders use and smart money guys use to trick out retail traders. Now, I need you to be aware of this trick. If the market is bullish, you want to stay bullish with the market. Okay, that way you have higher chances of winning. And what do we have? We have triple bottom here. How come we have a triple top and a triple bottom here? It simply means that the market is still bullish. But what did we see here? This whole move here was just a move down to grab out liquidity. In case you're wondering what liquidity is, I'm going to be dropping a video in the future to talk about liquidity. But let me give you a hint. A hint about liquidity is the run out of money. Smart money guys, we all know that the market comes to stop us out whenever we place our trade. So this is what the market was doing to trick out retail traders and will stop them out. Now the question is, how do we know that this market is about to turn from what it was doing here to the initial, what it was doing here? Let me put this out. Okay, what it was doing here to the initial turning out into being bullish. How do we know? The market will always tell us that we are turning bullish at some point. This was actually the market giving us a double top here, telling us that we are turning bearish momentarily. That doesn't mean the market structure has changed from bearish to bullish. It actually means that we are actually still on the bullish move, but we are actually on the retracement move to grab our liquidity. But we need to be aware of something. When the market wants to reverse from this zone here, it will give you, first, we have inner trend line break and we have major trend line. What are the major trend lines? I'll point them out for you here. This is a major trend line, swing point, sorry. Major swing points are this. Major swing points are this. And we have virtually over 2 or 3 of them here. But there is another one here that is called the minor swing point. Now take this closely. Whenever a market wants to move from a bullish, from a bearish to a bullish, it's going to be giving you a minor swing point. Now whenever a minor swing point happens, it's going to be moving from that minor swing point to a major swing point. That is to tell you that that minor swing point has to be broken first before the major swing point will be broken. Now let's point this out. The minor swing point should start from here. I think you start from here. Yeah, if I'm not mistaken, sorry. Okay, this is it. I think I'm fine with this. Okay, how did we know this was a minor swing point? I'll show you. This was broken. This was the major swing point that the market touched. Yeah, then we had a break from the minor swing point to the major swing point, and the market came back down to touch the minor swing point before it actually came out to break the major swing point. Now, how did we know this happens? Whenever you see a minor swing point has been broken, please be aware that we are moving to the major swing point, which is this. And once the market comes to that major swing point, don't forget it's going to be coming back down to the minor swing point to respect it before going back up and reversing. This is the first signal to know when the market wants to reverse. If you go down to the lower time frame, you can be selling from here. You might be selling from here, all these zones here. You might be selling from all these zones here. But that doesn't mean we are actually turning bullish immediately. It simply means it's a signal for us to know that we are about changing from where we are momentarily, which is bearish, to a bullish scenario. Let's see if we can see this in the 30 minutes time frame. Let's go down to 30 minutes. Besides, I'm using Deriv. This is not trading view itself. It's called Deriv trading view. And I prefer using this because I think it gives me what I want. And it's actually sweet very swift in terms of execution. Okay, so if you want to check it out, you're free to do so. Let's see the 30 minutes and see what it has for us. All you just have to do is just type tradingview.deriv.com. It's going to be taking you down to this zone here. Okay. TradingView has actually been messing up lately, so let's try this out. If we can find this. If you can find this, I think that will be better off. Okay, I think it's still moving. Please, in case you haven't subscribed to this channel, do so. Like and leave a comment in the section below. In case you're actually confused and you want us to create more videos about trendline, I have actually lots of videos. I'm going to be leaving the link in the comment section where you can have access to so many of it about trendline. You will get to understand it. You need to understand the basics about trendline first before you can be able to understand what I'm trying to explain in this video. It's a little bit complex, but if you put in your time to practice it, I think you will have a better advantage to knowing what the market is doing. With trendline trading strategy, you can be able to know when the market wants to reverse, and that way you are at advantage. Okay, I think this isn't loading. Let's go to 1 hour. See, this isn't loading. Hopefully 1 hour gives us what we're looking for. That should be better off. I want to show you guys what I'm trying to talk about. So please take note, it happens in all the time frame. Let's take an example. You're trading 4 hours. Let's say you're trading 1 hour and you place an entry and the market is respecting major swing point, and all of a sudden we have a minor swing point in between. If you go down to the 30 minutes, it's going to be breaking trend line. Okay, that is the first signal telling you that hey, we are about to turn in an opposite direction. If you can be able to get the clear message of what the market is doing, you can be able to be at an advantage, and that way you will be able to execute more trades and stay profitable on the long run. Okay, this isn't showing. I don't know. Okay, I think I'll just explain from the 4 hours. But please, if you want to do a research on this, you're free to do so. If you have any complication, you can actually come to my DM on the comment section and just leave a question there. We'll give us attention to it immediately we see it. Okay, we attend to questions immediately we see them. So okay, so that's it for this. It happens everywhere. So let me give a clear example of this also here, so you can just get an understanding of what I'm saying. Let me see if I can explain this from here. Major swing point and minor swing point. Okay. Will this work? Okay, I'm going to be taking out this leg. I think I prefer using this. Okay, now why am I using this? I'll tell you reason why I'm using this, and I'm going to be showing the swing points. I take out this particular one here because it was a little bit violated by smart money. So we have swing points here. Now there's something you need to be aware of. Something you need to be aware of, and that's this. Let's draw the major trend line. I'm seeing two zones here. This is the first one telling you that we are about to move in an opposite direction. If you can get the picture of this, I think you have it. If you can get a picture of this, I think you have it. You get a picture of this, I think you have it. So let me just point this out here. Okay, it's better off. Okay. Okay, however this case is, man. Let me just draw this here. Here, this. So once this one was broken here, it actually came back here and came back to the original main trend line. And I think this is clearer. It came back here and it went back up to this original trend line again. So can you see that price actually respects swing points and trend lines? This was the first one. It came here and tapped into it. Sorry, yeah. It went back down and broke it. Came back up to the trend line. Came back to the original trend line, which is overall. Then went back to this one here. Now, how did we know? This should tell us that whenever this one has been broken, the market is retracing back to this zone here. So you should be exiting from this point. I don't know if this is clear enough. Let's move a little bit further. Let me clear this out. I think, yeah, it should be the last. It should be more clearer. Oh no. Okay, let me just draw this trend line here. Okay. This isn't straight enough. I don't know if it's. Okay. I think I will just leave it like this. Okay, better off. I think I'm up. Okay. This is preferably. Don't forget, this is our overall trend line. Okay. This is our overall trend line here. So, but this one was respecting swing points. So whenever we saw the market going up, and going up, and we got a break here, this came back here to the trend line, and before it reverses back to this one here. But there was no opportunity. That most of the time the market will come back here to this first trend line, to this first one here. This first one here before reversing to the downside. But whatever the case might be, please take note. This is what I want you to get out of this video. Whenever the market breaks the original trend line, which is the first one, it means it's about to reverse from this one here, coming back to this one before going back to the downside. But the first, which is the minor trend line, let's go the minor trend line break, you need to be aware that the market wants to reverse. I think you've been able to get any value from this video. If you did so, please comment, like, and leave a comment in the section below. Okay, now let's move down to the bearish. Let me see if I can show you guys one of the ways the market moved. This market is actually bullish. Okay, this market is actually bullish. Yeah. Okay, let me just see if I can explain from this. Since we know that this is the bullish, okay, let's see somebody else want to trade the market has been bearish here. Has been bearish here. This is what you should be doing. This market is bearish, right? Let me take these ones out so to not be whole crowded. I think it's a clearer picture. It happens both in the bullish and in the bearish market. Please take note, this market is actually a bullish market, but I want to take for an example for it to be bearish momentarily. For me to say if I want to be trading this and I want to exit or know when to exit this market, there's something I'm going to be doing. Okay, you can vividly tell that this market is actually not bearish, because bearish market doesn't move like this. Okay, it doesn't move this way. But whereas we have swing points 1, 2, 3, 4, and I like 5. That's cool. That's great. But let's look at some things here. One of the things we need to look at for here is that we had a trend line break, the minor trend line break. Yeah, that was it. Because the trend line is not initially bearish, so the candles are actually very, very small. But if you look closely, you will notice some things here. We got a break, and we got to respect on that break before moving to the original trend line, before coming back to this one. Like I said, it will come back to the minor trend line before reversing back up. Okay, before reversing back up. So that is how it works. I think I've been able to clear out something. But if you have a question, I think I'm going to be creating more videos about this in the future. Just don't forget to subscribe, like, and hit the comment section below.